Hello, everyone. Welcome back to the Trader Dane podcast. Just a quick disclaimer before we start. Remember that anything that is said by me or anyone else on this podcast is not to be considered financial advice or recommendations. It is only for educational and entertainment purposes. All right, let's get started with episode 2. So I'm still getting to grips with this. So I hope you're keeping along. Really fun to make, both the recording, the editing, and so on. So I hope you also get some value from it. Now we're going to start diving into some of the topics that I'm dying to talk about and dying to communicate. So one of the things I'm really aiming for is target European trading as opposed to trading in the United States, because it's much more mature in the United States. We don't do as much, at least that's my impression, active trading in Europe and in Denmark, where I'm from. I listen to a lot of other podcasts. I also listen to the mainstream investment media. We have a big daily podcast in Denmark that is strictly focused on long-term investing, picking out the good stocks, holding on to them. I mean, they will often say that a good holding period is 3 to 5 or even longer years. And that's fine. All of that is completely fine. It's just a different way of investing. Where I think it sometimes borders on misinformation is the constant talk about a cheap stock or an expensive stock, the focus on price earnings ratios and so on. So a lot of the European media and the Danish media especially will talk about cheap stocks. They will talk about buying into a stock that has been dropping dramatically because now it's cheap. And once you start diving into the literature, like the classic books, Jack Swagger's Market Wizards, what else do we got? I think Edwin Lefebvre's Reminiscences of a Stock Trader, some of the books by Ed C. Coda, and all these classic traders, you start realizing that the financial markets do not work like the discounts you get in the supermarket. And you will hear Tom Hugard, who is a Danish day trader, one of the few, but a really successful one, talk about this thing that the financial markets tend to work oppositely, at least to some extent, right? Where an expensive stock is actually quite likely to become even more expensive, because that's how the psychology of the markets work. If something is popular, if something is selling at a high premium, more volume, more people, especially more retail investors and traders, will start piling into the stock, driving the price even higher up. So you will often hear traders talk about, okay, something breaks out a range to the high side, it's becoming more expensive. That's actually, to a trader, that's a buy signal, not a sell signal. You don't want to sell something that has a high price. You want to buy into something that has a potential to get an even higher price. And that's how the financial market works. Obviously, there's a lot of analysis. There's a lot of know-how that goes into picking the right ones and not the ones that you just buy on a breakout and then they dump. But none of this is really talked about in the European mainstream media that I'm following along. I have to tap into different channels, books, podcasts from outside of Europe in order to get that kind of knowledge, the trading kind of knowledge, which is really, when you think about it, there is a lot of value to you as an individual retail investor in picking up on some of these pieces of advice, because you see some of these talented traders, and arguably it is a bit like elite sports. You need to invest your time in it. But if you do so, you can make a hell of a lot of money. You can be very successful in trading something in a way that's very different from what you hear in the mainstream media. And I'm trying to be that kind of counterbalance in the European trading and investing space, because you will hear the conventional wisdoms, the maxims of buy and hold, set and forget, just buy a good stock, the kind of almost Warren Buffett style investing, buy the really high quality stocks, which can also work, and then sit on them for 20 years, 30 years, and just forget about them. And by the time you need to retire or you pass it on to your kids, it will have compounded a hell of a lot, which can work, yes. But if you are more into active investing, there are other methods that will make you much more successful than just buying and holding. Now, obviously, there's also some caveats to being a European trader. One of them is that the time zone difference, basically. So what I do when I trade is I have a 9 to 5 job, which is more like a 7 to 3, because I tend to get to work early. That leaves me time to get off work at 3 p.m. in the afternoon. I can then commute home from the office and be ready at my desk, at the screen, at the charts at 3:30, which corresponds to 9:30 Eastern Standard Time, when the New York Stock Exchange and the US markets open. So for me, I have to trade. In contrast to an American, I would have to trade after a full day of work. My mind might be a little bit worn out, a little bit tired, but I have to make that work somehow and be at my best game from 3:30 in the afternoon to around 5:30 in the afternoon. So that's where the prime time is for me, because I trade the US indices. I obviously could also trade the European indices. It's possible. It's just, again, it's a little bit lower volume, a little bit less volatility, can also be a little bit more unpredictable, but we can discuss that at length. I tapped into the US indices because of the volatility, the liquidity, the dynamics of those indices, and that really fits me well. So I have to manage with that time zone difference, basically. Another thing that is sort of key for a European perspective is, and I might be generalizing a little bit here, but Europeans tend to be a little bit more risk averse. So on the psychology side, I think we are a little bit less optimistic, less risk willing compared to Americans. I'm generalizing, I know that. So day trading becomes this thing that is frowned upon. Like I said before, it becomes this like almost kind of forbidden thing where you don't really want to do it because you're scared of it, or you think you're going to risk a lot of money doing, which is really not the case. And I'll get into that in future episodes. It isn't that risky, actually. I know a guy who will say it's less risky than conventional investing, because if you buy and hold a stock and you don't have a stop loss order sitting under it, you're long in a position that can essentially go to zero. You can lose all of that investment. I never do that in my day trading. I never do that in my swing trading. I will always have my risk capped by having stop loss orders sitting close to my entry price. So yes, that means I will take more losses than the average investor, but I will have them capped. That means when I win much bigger than when I lose. And that's really the essential key, one of the golden rules of trading. And it should be one of the golden rules of long-term investing as well. You don't want to hold on to losers, but you do want to hold on to winners. Now, as I said, Europeans tend to be a little bit more risk averse. So day trading just has this ring of risk to it. And I want to try and dispel that, because day trading does not have to be super risky. At least if you are in control of your emotions and your psychology, it can even be less risky than long-term investing. So think about that. And I also want to try and talk into that, because we as Europeans, again, day trading is not something that's part of our investment culture. Like in the US, you have hedge funds, you have money managers and so on. And I tried looking up hedge funds based in Denmark. It doesn't exist. Obviously, there's also a lot of tax regulation that just doesn't favor this kind of entity. So it doesn't exist. We don't have that culture of being active money managers and traders. So I want to help try change that through this podcast. Instill into people's minds that one thing, yes, there can be less risk in day trading, especially nowadays with prop firms and all that, than there is in conventional investing. And also just because I know there are people like me sitting out there wanting to be more serious about their investment, about their trading, wanting to be more active, having a passion for charts, having a passion for stocks and indices and commodities and so on, but they don't know where to get started, because there is not that much information about it from a European perspective, from a Danish perspective even. So I want to provide that. So if you stay tuned to the future episodes of this podcast, I want to really dive into some of these things. And I'm also going to hopefully bring active European traders and also traders from abroad. I know we have to learn from our American friends into the podcast to make sure that you get as much value out of this as possible. And hopefully you can start gradually transitioning from just, like I said in my first episode, just buying and holding an ETF, which is the most boring investment strategy you can have. Not necessarily that you will lose money on it. You can gain a lot of money on it over time, but it's just so boring. And if it doesn't fit your psychology, I want to provide something that may fit your psychology better and help inspire you to take the first steps on that journey. And just a final note from my side on this episode too, if you enjoy what you're listening to here, and if you are an aspiring investor or trader, please leave a 5-star review. It really helps me to understand what people want and what my audience is looking for. And I can also build this platform even further. That's it for now. Thank you for listening.